Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. We start with some news. The Bangko Sentral ng Pilipinas cut benchmark rates by another 25 basis points as inflation remains, or rather continues to ease. This is the second rate cut this year, bringing the BSP's benchmark target reverse repurchase rate to 6%. Central Bank Governor Eli Remolona Jr. says another 25 basis point reduction is likely in the final policy meeting of the year in December. Now, while some analysts suggest a larger 50 basis point reduction, Remolona says this is too aggressive and will only be possible in a hard landing scenario. Although inflation is on a downtrend, the BSP slightly raised its inflation forecast to 3.3% for 2025 and 3.7% for 2025. That's 3.3% for this year and 3.7% for 2025. This is due to potential increase in electricity rates and higher minimum wages in areas outside of Metro Manila. Bond traders got some breathing room after the central bank's rate cut. The Inquirer reports the debt paper fetched an average rate of 5.69%, lower than the average rate of 6.128% on the comparable 7-year debt note issued on August 13th. This is also cheaper than the 5.7% rate quoted for the same tenor in the secondary market as of October 14th. The Bureau of Treasury made a full award of 15 billion pesos in reissued T-bonds, which have a remaining life of 6 years and 9 months. With investors betting on lower borrowing costs, the bond market is pricing in the central bank's next move. The Monetary Board is expected to slash the benchmark interest rate by another 25 basis points by December. Sales of vehicles in the country rise as automotive firms ramp up their product promotions. Janelle Baroga reports.
Ends September with vehicle sales totaling to 344,307 units, a nearly 10-point increase from the same period last year. That's according to a joint report by the Chamber of Automotive Manufacturers of the Philippines and the Truck Manufacturers Association. Sales also climbed month-on-month by 1%, with 39,542 vehicles sold in September compared to 39,155 in August. CAMPI President Romel Gutierrez says, quote, the increase can be attributed to new stock arrivals and improved promotions from the brands, end of quote. Commercial vehicles accounted for 74% market share, while passenger cars cornered 26%. Toyota retained its pole position with a market share of 46%, followed by Mitsubishi with 19%, Ford 6%, Nissan 5.9%, and Suzuki 4%. Last September, no new models were released, possibly due to the upcoming Philippine International Motor Show, where new launches are expected. Janelle Baroga, BNC.
As interest rates become a critical factor in the real estate sector, the anticipated rate cuts by the Bangko Sentral ng Pilipinas could reshape the industry in the coming years. Today, we delve into the latest trends from Colliers Philippines second quarter 2024 report, exploring potential impacts of the monetary policy on property markets and the industry's expectations from government policy. Joining us is Joey Roi Bondoc, Research Director at Colliers, to offer insights into the evolving landscape of the Philippine real estate industry. Joey, good morning and good to see you again.
Hi, Raine. Good morning. Great to see you again.
With interest rates expected to decline further up to 2025, is there a segment of the real estate market that you think could benefit the most, and why?
Definitely, Raine, it's the residential market, it's the condominium market. However, if I want to dissect further, definitely it's the
All right. Joey, yeah, okay. We had a little bit of buffering right there. Can you kindly repeat what you said?
That's about
All right. I think the signal is. All right. We'll try to get back Joey Bondoc in the coming minutes. But in the meantime, we'll take a look at the story of palay. Production of palay or unhusked rice is expected to decline by over 10% in the third quarter. According to data from the Philippine Statistics Authority, palay output is projected to reach 3.35 million metric tons for the July to September period. This is down from 3.8 million metric tons in the same period last year and lower than the previous forecast of 3.39 million metric tons for July. The total harvest area is expected to shrink by 14% to around 800,000 hectares, but yields per hectare may improve slightly to 4.2 metric tons compared to last year's 4.1 metric tons. By early September, about 39% of the harvested area had already yielded 1.31 million metric tons of palay. And of the remaining crop, 16.5% is still in the reproductive stage, while 83.5% is maturing. Rice production remains highly vulnerable to the impacts of El Nino, which brings drier conditions, reduced rainfall, and more intense typhoons. President Bongbong Marcos is calling for investments in infrastructure to support local mineral processing. Marcos points out that the Philippines, with its abundant resources, is well positioned to benefit from the global shift towards clean energy that has increased demand for critical minerals.
To truly harness this potential, we must invest in the infrastructure and the technology required to process these minerals domestically. And at the same time, it is imperative that we adopt mining practices that prioritize the environment to ensure that our extraction processes are clean, efficient, and restore the land that has been mined.
President Marcos also urged lawmakers to support the rationalization of the mining fiscal regime. This measure seeks to impose a four-tier margin-based royalty ranging from 1.5% to 5% on income from mining operations outside of mineral reservation.
This crucial bill, which I highlighted in my 2023 SONA, is fundamental to creating a fair and equitable mining environment for everyone involved.
Meralco has struck a deal with San Miguel Corporation, saving households and businesses some 11.8 billion pesos in electricity costs. The Philippine Star reports after offering the lowest bid, San Miguel-led Masinloc Power Company secured 500 megawatts of the total required contract capacity, while Aboitiz Power Corp's GN Power Dinginin grabbed the remaining 100 megawatts base load requirement. The 15-year power supply agreements effective September next year to ensure reliable and uninterruptible electric service to its consumers. Delegates from dozens of countries discussed the importance of boosting investment toward climate action. Details from Soo Jin Kim.
The environment and climate change, high on the agenda of the 2024 Investment Policy Forum. The event gathers nearly 100 delegates from 40 countries to discuss equitable and sustainable international investment policies. For UN Special Rapporteur Professor Surya Deva, now is the right time to give special attention to environmental and climate challenges.
We are not respecting the planetary boundaries. And Philippines is a typical example where a lot of natural disasters are impacting people all the time. So think of the development differently in terms of the investment landscape. So the private sector has a key role to play, and the governments also have a key role to play.
These pressures require strong investment frameworks that reap benefits for people and mobilize resources for governments to invest in education, health, and much-needed infrastructure.
The aim of the forum is for different investors to create and bring home a sustainable development toolkit that they can develop in their own countries.
So a forum like this should be able to bring the policymakers together to ensure that they don't merely look at economic development, but they also look at from the lens of more holistic development, which is cultural, political, social, and economic development.
This is the first time the Philippines hosted this event, which comes on the heels of the Asia-Pacific Ministerial Conference on Disaster Risk Reduction. The APM-CDRR, which was also held in the Philippines, likewise highlighted the need for investors to embed in their corporate plans disaster risk reduction and resiliency strategies. Sujin Kim, BNC.
And we're back with Colliers Philippines and Joey Roi Bondoc. Joey, hi. Again,
Hi, Raine.
All right, great to have you back. Now, we were talking about the segment of the real estate market that stands to benefit the most from the declining interest rates. You said it was the residential segment.
Yes, that is correct, Raine, especially the mid-income segment, the 3.6 to 12 million residential market, especially because investors, buyers of these condominium residential units are very sensitive to high interest and mortgage rates. So definitely, the central bank's decision to cut interest rates will likely result in lower mortgage rates and provide a reprieve to investors and users that are acquiring these residential units.
Joey, your Colliers 2024 report, the last one, second quarter report, highlights a slower recovery in the residential property market despite potential rate cuts. Are there factors that are currently hindering this recovery, and how do you see the market evolving by mid next year?
Definitely, Rain, we're seeing elevated mortgage rates really having an impact on residential appetite, a take-up across Metro Manila. We're also seeing, for example, surging land values, prices of construction materials have been increasing. So definitely high interest rates, mortgage rates are major concerns for the residential sector. That's why we're seeing very low take-up right now for pre-selling condominium units in Metro Manila. But the good news is that developers have been offsetting this by launching more projects, horizontal, house and lot-only developments outside of the capital region.
Joey, the report also mentions that there's a demand uptick in industrial and logistics spaces. But first of all, do you see that the business process outsourcing spaces have been vacated and there's a lot more space there and you don't see a rebound? And do you see a lowering of interest rates supporting that uptick in industrial spaces? What other external factors could be influencing this growth?
Definitely, Rain, we're seeing continued interest in the Philippines from manufacturers, for example, semiconductors, electric vehicles companies, for example, continue to expand their industrial operations here in the Philippines. For example, the manufacturer of an electric vehicle battery inaugurated its facility, Philippines Innovation Park in Clark. And definitely, this will likely result in the Philippines becoming a hub for the manufacture of semiconductors, electronics, and even electric vehicles. Note that electric vehicles, EV, is a sunshine industry for the industrial sector. And we're likely to see more EV companies investing in the Philippines. Those from the United States, Australia, Vietnam continue to invest here and are expanding their industrial operations, which is resulting in the absorption, take-up of greater industrial space as well as warehouses, especially in major industrial locations, including Central Luzon and Calabarzon.
What about the BPO spaces?
Well, definitely, Rain, you mentioned the spaces being vacated by the BPOs. We are seeing that because right now, BPO companies have been implementing work from home. They have been rationalizing their office space requirements, right sizing. That's how we call it. And while some are implementing work from home, some of these companies still occupy substantial office space. Right now, we're seeing Metro Manila still accounting for about 80% of total BPO deals across the country. But 20% of that still coming from other key area cities outside of Metro Manila, including Cebu, Bacolod, Iloilo, Pampanga, as well as Davao. So while they continue to occupy office space, admittedly, they have been vacating office spaces. Major reason why right now we have about 2.6 million square meters of available office space in Metro Manila. And it will take a few more years before that vacant available office space is absorbed by the market.
Thanks for that, Joey. Now, finally, Colliers has outlined key policy recommendations for the government to help accelerate real estate growth. Can you share with us what these are and what policy change you believe would have the most immediate impact prior to your third quarter property report?
Well, definitely, Rain, I believe that the infrastructure program of the government will have substantial positive impact on the property market. However, you want to call it build of the previous administration, build better more of the current administration, the 5 to 6% spending on infrastructure as a percentage of GDP translates to 1 trillion pesos every year. And that should result in a better, improving infrastructure connectivity and will likely result in decentralization, another program of the government, and that will result in more economic centers, economic hubs being created, being developed outside of Metro Manila. So infrastructure implementation, decentralization definitely are very important. But I would like to add infrastructure implementation. What we have been seeing right now is a delay in infrastructure implementation for the Metro Manila subway. For example, mainly because of right-of-way issues. Hopefully, the right-of-way does not get in the way of infrastructure implementation. Hopefully, we see more major big-ticket projects such as Manila Subway being completed on time. This is a 450 billion peso project and will definitely do a lot of wonders for Filipinos, for property, raise land values, property prices, and even raise rental prospects of properties, condominium units that are near the major stations of the Metro Manila subway.
That's quite a long wish list, and we definitely have our work cut out for us. Joey Roi Bondoc, Research Director of Colliers Philippines, thank you so much for your valuable insights today. We appreciate it. And we're taking a breather. Follow the Money. We'll be right back. Stay with us. Welcome back. The World Bank announced a $30 billion expansion in lending over the next 10 years. That's thanks to the support of developing countries, or that's for the support of developing countries. This measure makes loans more accessible, aiming to address climate change and economic instability.
But the issue of what the next replenishment should be, you've got to put it in context. 93 billion is what the current one was, IDA 20, which is the contributions from the rich countries leveraged by our bond issuing system in the private markets thanks to our AAA rating. What we're now trying to do is to get to past that. The African countries, President Ruto and a bunch of others, and Mia Motley from Barbados would like to get to the 120. Somewhere between the 93 and the 120 would be a great thing. If we get to 120, that'll be outstanding. That's what we're working on. But to get to 120, you've got to get the contributions from the rich countries to go from 24 billion to 30 billion, because that's the 4:1 leverage we get on top. The challenge with that, Andrea, is that right now, a number of countries are both facing fiscal challenges, and then, of course, there's the issue of the higher dollar versus their currencies. So their contributions are under double pressure.
Hedge funds are increasing bets on currency volatility, expecting market disruptions if Donald Trump implements new tariffs. Bloomberg reports the surge in options trading reflects concerns over trade impacts on the dollar and global currency markets. Experts warn that the new tariffs could trigger sharp market shifts, impacting the dollar and global currency markets. A new survey reveals that 1 in 3 investors fear a recession if their preferred political party loses in the upcoming U.S. elections. Reports coming out of Bloomberg show these concerns reflect rising anxiety over political outcomes influencing financial markets. Experts caution that uncertainty may drive market volatility in the months ahead as investors keep a close eye on election developments. Microsoft has detected an uptick in cyber espionage efforts from Russia, China, and Iran, targeting infrastructure amid global tensions. New threats have emerged during the Israel-Hamas conflict, with cyber actors focusing on gathering sensitive intelligence. Microsoft urges governments and corporations to stay alert as geopolitical unrest escalates digital attacks. Computer chip equipment maker ASML opens new tab, deep cuts to its 2025 sales forecast, sparking a sell-off in chip stocks on Tuesday over worries that global chip demand may be faltering. ASML stock plummeted to its biggest single-day loss in a quarter century on its downgraded forecast, and results that the company inadvertently posted a day before the schedule. ASML said it expects 2025 total net sales of 30 billion to 35 billion euros, near the bottom of its previous forecast. The weaker outlook could instead reflect some overcapacity at chip factories that had already stocked up on ASML's pricey tools during the pandemic and have become better at using them to produce a larger number of chips, as Samuel said. Airbus, now over to Europe, where aerospace giant Airbus is planning to cut up to 2,500 jobs in defense and space division. The planned cuts affect 7% of divisional workforce and are scheduled to take place by mid-2026. The layoffs come as demand for military contracts wanes and Airbus looks to streamline operations. Airbus stock closed Wednesday up 0.1%. Back to the U.S., the FTC is taking a bite out of tricky subscription models. New rules announced today will force companies to implement a click-to-cancel feature for customers looking to dump unwanted subscriptions. FTC Chair Lina Khan said if consumers have ever been trapped into auto renewals, now they'll be able to cancel as easily as they signed up. The move targets companies who rely on complicated or hidden cancellation processes. It's expected to save Americans billions annually in unwanted charges. Trade groups representing car washes, retailers, news publishers, TV providers, and other businesses had called parts of the proposal burdensome and unnecessary. 3 weeks before Election Day, the rule is among the final pieces of U.S. President Joe Biden's broad effort to tackle junk fees. Still in Asia, Hong Kong unveils new measures to improve financial hub's sluggish economy. Chief Executive John Lee plans to regulate the leasing of so-called subdivided flats that will ensure basic safety standards for 110,000 households currently living in such units. Flats smaller than 8 square meters, twice the size of a king-sized bed, will be banned. These units must now have windows and include a toilet. In addition, duties on liquor will be slashed to 10% from 100% for drinks with more than 30% alcohol content to help boost tourism and high-end dining. Other reforms include easing mortgage restrictions, expanding the investors' immigration scheme, and setting up a $1.29 billion fund to invest in AI and semiconductors. Hong Kong aims to repair its international reputation following a crackdown on pro-democracy protests in 2019 that have curtailed citizens' rights. Finally, in tech news, Amazon has just unveiled the future of reading with the launch of Colorsoft, its first Kindle with a color screen. Retailing at $279, this new device promises a more vibrant reading experience, especially for graphic novels, comics, and magazines. The move could be a game changer in the e-reader market, where black and white has been the standard for years. Shipping starts next month, just in time for holiday shopping. Amazon stocks closed Wednesday 0.5% higher. And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Billionada News channel, always on top.